Welcome to Dig Deep, the mining podcast. In this podcast, we go deep into mining news, hot topics, and live interviews with mining professionals and leading figures in the mining industry. Introducing your host, Rob Tyson, founder and director of Mining International and Mining International Executive, a leading global mining recruitment and headhunting agency.
Hi mining community, welcome back to another episode of the Dig Deep, the mining podcast. And today we have a returning guest who appeared back in November 2020. So it was 3.5 years ago, which was episode 104. Merlin Marr-Johnson, who's the CEO of Fitzroy Minerals, who are focused on exploring and advancing commercial copper and gold discoveries in Chile, Argentina and Canada. Merlin's a geologist by trade, has over 25 years experience in the resources sector in a technical, corporate and capital market capacity. Merlin's belief is that old primary industry principles of economic theory, which says wealth can only be created with land, work, ideas and capital, and obviously still relevant in today's market. He's going to tell us a little bit more about Fitzroy Minerals, the projects in Chile and Argentina, and also the story behind The Con, which is a series around investing in the natural resources sector. Merlin, welcome to the podcast. How are you doing?
I'm good, thanks, Rob. Good to be speaking to you again.
Yes, and yourself. And it was 3.5 years ago. So for those that didn't manage to listen to that episode, obviously feel free to go back 3.5 years ago and look at that. But I wondered if you can just tell us a little bit about your career and about your background before we obviously start speaking about Fitzroy Minerals and The Con.
Sure. Well, you said I've got over 25 years experience. I think when one gets to a certain age, you start putting over 25 years because otherwise you just seem really old. But it is 30 years ago next month that I graduated with a geology degree. And I went down to South Africa and worked for Rio Tinto as an exploration geologist. And I've spent the last 30 years kind of straddling the boundary between running exploration companies and doing the kind of the technical exploration side of the business. With, on the other side of the fence, I've been an analyst and a fund manager, and I've looked at the resources sector from a top-down basis, looking at exploration, development, company evolution, the kind of investment thesis for wanting to have an ownership of resources, and also at what stage in that cycle do you want to be looking at, and what the maturity of the company? Should you look at an exploration company, a development company, or a producing company? So I've kind of done both sides of that business. And when we last spoke 3.5 years ago, I was in the exploration side of things, and it was the pandemic was raging, and I was also being drawn back into doing some analysis and some research. And so for the last 3.5 years, I've actually run with the dual track of things. So I'm the CEO of Fitzroy Minerals, and I'm dealing with exploration discussions and recruitment and drillers and looking at soil geochemistry and geophysics and geological questions. And then at the same time, I'm doing this kind of series of lectures called The Con, and I'm writing lectures on investment theory and various aspects of the business that one needs to look at.
So yeah, I just wondering if you just tell us a little bit about Fitzroy Minerals.
Well, Fitzroy Minerals is a TSXV company. It's got a relatively small market capitalization. We've raised a couple of $1 million in the last 4 or 5 months. So we're funded. We've got about $1.5 million, and we're funded enough to kind of get started on a drilling campaign. And the portfolio is a gold exploration project in Argentina, and a copper and gold epithermal project in Chile, and a pure copper exploration play in Chile as well. And what happened was a year ago, I was approached by Fitzroy Minerals. It had a different name at that time. And the directors asked me if I could help understand what the Argentinian asset was about, because that was the lead asset in the portfolio. And they had some projects in Canada they were no longer spending money on. But the directors didn't speak Spanish and they weren't particularly technical. And I said that I was fluent in all four, English and Spanish and corporate and technical. And I had a really good look at the project in Argentina. And you've got to remember that last year the capital markets were just so terrible. And it was a really interesting exploration play. It had lots of potential. But it was very early. It was very early stage. I mean, all of the indications were good, but it was super, super grassroots. And I reported back to the guys. I said, it's good, but it's a bit skinny at the moment. We need more meat on the bone. I said, to raise money in Canada on the Toronto Venture Exchange in 2023, you need to have a dripping roast. I said, you've got to be something really juicy. And so then they asked me to go and look for the said dripping roast. And I was working in Chile on a private copper project, which I've been working on for a couple of years. And I've got extremely good contacts in Chile. And I went back to that network and I spoke with Gilberto Schubert, who's the ex-country manager for Chile, for Vale. He was there for 20 odd years. He's just incredible technical guy. And I said, remember that gold project that we looked at a couple of years ago? Is it still available? And he said, oh, yeah, it's available. And it's got even better. And it's this beautiful epithermal copper gold project. So we've got a bit of data from one of the adits, and it's running at 2% copper and 9 grams gold and 17 grams silver, a little bit of contribution from silver as well. And it's really in a really workable area. And it's low level, and it's surrounded by in mining country, and there are people who can mine, and there are process plants, and then he said, oh, and by the way, when he was working with Vale, there was a copper project just up in the mountains behind that, and he said that that's never been drilled, and it's got a kind of a potential $100-200 million ton target on it. So I wrapped up the portfolio, and I said to Norseman, which is now Fitzroy Minerals, I said, look, here we go. I think these two projects would work really well with that grassroots project in Argentina. And so I put them into the project, and I took a finder's fee, and I said, good luck. And they turned around and said, actually, could you run it? And I said, yeah, you bet, for sure. So we're going to be drilling that epithermal gold copper project, which we call Polymet, in Chile. We're going to be drilling that in a few months. We've got some geochemistry to do and some geophysics. And in Argentina, that skinny, early stage grassroots gold project just keeps getting better and better. We keep finding more and more veins. And then we're going to also do some work up in the mountains as well for the copper thing. So we've got a really active program. It's the company is, I guess, kind of pre-discovery, but it's massively de-risked by the fact that we know that Polymet has produced copper and gold in the past, and it's right next to a 1 million ounce, 10 grams a ton ore body, and we're basically kind of the on strike extension of that. So you get the Fitzroy Minerals at a kind of a pre-discovery price, but it's massively de-risked, which is always good for investors.
Certainly. Is there a reason why you're focusing on copper and gold and not any other commodities?
Oh, absolutely. Yeah. When you there's a reason why most junior companies, or there's such a preponderance of gold explorers relative to other commodities, and that is because gold is a high value product. It's got very simple and very well-known metallurgy. People know how to value gold mines. They know how to build gold mines. They know how to explore for them, and the process flow sheet is normally relatively straightforward, even if there's complexity in it. And the end product you can put in a helicopter or in a truck or in a box, and you can kind of take it out. You don't have any of that downstream logistics stuff. And very often you can get to a final product with your gold. You can pour gold outside. Okay, you send it off to a refinery for the last bit, but essentially you've got a massively enriched or beneficiated product, and you don't always just go through to the concentrate or the con, and we can come back to the con later. So gold is a real favorite for junior explorers because that's a really sensible way to create value. And copper as well. Ever since I studied geology all those decades ago, I've wanted and I've loved copper mineralization and the genesis of that. But that is kind of less relevant than the fact that we are in this kind of ongoing strategic long-term shortage of copper supply. There's a sustained supply-demand deficit coming. It's very hard to find new copper deposits. So I'm hugely bullish about copper. And given that we were doing gold in Argentina and the project in Chile was copper and gold, and there were other copper targets as well there, then it was just like, oh, this is the perfect mix. It's kind of gold and copper.
And obviously talking about gold and copper, what are your thoughts obviously on the prices of both? Obviously gold at its all-time high, or there or thereabouts, and obviously copper now starting to make that move.
Yeah, I mean, gold at an all-time high, or you can phrase it in another way, is that the dollar's at an all-time low in terms of its value. There's been so much printing or creation of new money. Kind of the money supply has grown so much. Kind of global debt is at such a high level, or kind of, U.S. debt. When you look at any currency, money is a matter of functions for. A medium, a measure, a standard, and a store. You know, it's an old ditty, and what the paper money has been brilliant at has been brilliant as being a measure and a medium and a standard. But what it's been terrible at is a store of value. And gold is the ultimate money. It may not be as fungible in kind of day-to-day terms as US dollars or any other kind of cash, but it holds its value. And that is why the gold price is at a all-time high in dollar terms, and it's why I think it's going to continue to run. I don't see this as kind of a temporary blip. So that's hugely exciting for gold. When one looks at copper, I've looked at the copper price over the last 20 or 30 years. I've got a nice chart. You can pull down the price chart. If you look at the gold price in dollar terms, it looks as if it's on a kind of on an upward trend. But if you actually look at it in terms of real money, so if you divide it by the gold price, what it actually shows you is that despite or kind of apart from a small spike around 2008, it's actually been on a 20-year downtrend, and we're actually at a lower copper price today in real money terms than we were 20 years ago. And if you look at the supply profile of the big mines, if you look at the kind of the top 20 of the largest mines in the world, they're all mature. They're tired, with the exception of Kamoa-Kakula, which is in the growth phase. Almost every single other deposit is in decline. Speaking to a friend who's got whose colleague sits on the board of Escondida, which is the largest mine in the world, 1.3 million tons per annum. The only thing that they talk about in their board meeting is how do they maintain production. There's no question of growth. And the copper demand profile has just ticked along every year, 3.3%, 3% every single year. And with electrification and the rise of the middle class, we've got 4 billion people in kind of coming out of a lower socioeconomic class to a higher one. The demand for copper is just continuing to grow, and things like AI and data centers. We need another. Trafigura estimates that we need another 1 million tons by 2030, and there are only 6 mines in the world that produce more than 500,000 tons of copper, and they take 18 years and $6 billion or $8 billion to build. So the copper market is going to really struggle to grow. The demand side continues to grow, and so it really feels to me that the copper price has got a long way to go from here. But what we've seen so far today is not an incentive price. We've just seen dollar devaluation. So this is not the price that's going to trigger new production.
Obviously, with your projects, what are the milestones and catalysts for this year with your portfolio?
Well, the market typically really responds to drill results. So, our share price is 12 cents. And what I hope to do is to kind of encourage people to kind of buy shares now while it's 12 cents before we drill. But the work that we have to do before drilling is, in terms of our milestones, we have to do kind of geophysical work, geochemical work, and geological work, kind of mapping and de-risking everything as best as possible before the drilling program. And in Argentina, in the project there, Taca Tren, we're actually kind of, one of our milestones is to try and map out all of the veins, because we're just picking up veins all over the place. So we actually want to do is just put an envelope around our kind of area of interest, because at the moment it's just growing and growing and growing. Whereas at Polymet, we've only got, I'd say only, but it's about 1,600 hectares, which is still quite a big area. But we want to map out the vein system, do the geochemistry over that. The soil geochemistry works an absolute charm there. The chemistry, the copper pops out, and we've got an XRF machine that set up so we can do it very quickly and cheaply. Then do the geophysics, and then drill. So those are all the milestones. In terms of the catalysts, I think it'll probably be the drill results. I mean, you've seen that last year, even in the bear market. You typically only get the real jump in the share price when those drill results come through as a success.
Obviously, your projects in both Chile and Argentina, and they're obviously reasonably close to each other. I'm wondering if you just compare and contrast the exploration investment strategies of both countries.
Yeah, I mean, they're neighbours, but they're in really different phases of their kind of mineral development. Chile, of course, is a mining country and has been mining for hundreds of years, and it's kind of in the DNA. And funnily enough, they've got a socialist government that has actually, over the last few years, realised how important mining is, and actually now is putting in pro-mining strategies, and the legislation there is very much mining. Obviously with environmental care and all of the responsible stuff that one would expect. That's all there, of course. And in some ways, people think about Chile as being kind of a mature area. Is there still a lot of exploration upside there? And the answer is yes, of course. And for example, Polymet, our epithermal copper gold project, is 13 kilometers away from this 1 million ounce gold deposit. And the 1 million ounce gold deposit has got gold veins which trend towards Polymet, and we've got veins which trend back towards that gold deposit. And yet there's never been any systematic exploration on the Polymet license area. So we've consolidated the ground, sure, which was a bit of a patchwork. But can you imagine anywhere in Australia or Canada where that would not have been drilled or Swiss cheesed by drilling? I mean, it's just such an opportunity. There are mining providers and drillers, and everything is right there in Chile. So there's still that kind of upside and excitement in a very mature environment. In Argentina, at the moment, we've got this extraordinary president, Milei, who's trying to turn around the political economy of Argentina, which has been a basket case for so long. And he's trying to do it with kind of economic shock treatment. And in a sense, Argentina is really, really exciting because it's never really fully opened up to the mining potential of the country. It's always been slightly half-hearted about it. You've still got foreign exchange controls. Argentina's kind of promised a lot, but hasn't actually delivered a lot. And you've got companies like the Lundins of this world, and the Filos and the NGXs, and Lundin Mining, and a lot of the big guys are in there, promising these development dollars and making the big exploration discoveries. And I mean, even guys like Aldebaran, and there are lots of companies in Argentina saying we can do this. And the geology is spectacular. I mean, our project has had almost no geologists ever work on it before. There were a couple of state stream sediment samples, and there's some basic anomalies, and there's some kaolin mines, which of course are good kind of clay alterations signifier. But Argentina's kind of wide open and young, and I've historically been a little bit cautious about exploration in Argentina, but the fact that we've got 68,000 hectares and we're finding it's basically like every time you look under kind of cover, you're finding another vein set. It's tremendously exciting. And Milei is trying to open up the country as well. And he's doing things like saying, we're not going to support the provinces unless you develop your natural resources. You have to be able to fund yourselves. So two countries which are neighbours, and they are so different. One's mature with a socialist government, but it's kind of mining in its DNA, and the other is got a kind of a liberal, a libertarian president who's trying to do this economic shock treatment on a deeply socialist country which has never seen its potential fully explored. So, I mean, I feel very privileged to be in both countries.
As a junior miner, what would you say investors should look for at pre-discovery companies as opposed to, say, more mature companies or even some of the bigger companies? What should investors be really looking at?
The pre-discovery stage of a mineral exploration company is it's a really interesting one, because that's where you get these kind of micro cap companies like Fitzroy Minerals, $10-15 million market capitalization. And it doesn't take a lot. It doesn't take many catalysts to transform that from a kind of a $10 or $15 million company to a $50 million company. So what you really want to look for is kind of near-term catalysts. You want to you want to see that there's scale potential in the geology. You've got a team that knows what they're doing. In a country where you can work, one of the key things that I always look at is independence. Are you able to work freely, or are you waiting a long time for your permits or your social approval? And as long as you can really work quickly and you don't need to wait, you've got autonomy, you've got agency. That's a key thing to look for in a company. Plus, you've got to be in a with a team that you feel comfortable with, and they've got to be technically competent. So they've got to have they've got to have cash and good supporters as well. So cash, people, projects with scale, and independence. Those four things.
Obviously, we mentioned about the con. I just wanted you to just tell us a little bit about the story behind the con. And also, I know you're near finishing it, and when will it be finished?
Yeah, it's like painting the fourth bridge, isn't it? Okay, so the con, I've been in resources, as I said, for 30 years, and in 96, I did a master's at Imperial College, the Royal School of Mines in London, and it was called Mineral Deposit Evaluation, Technical and Financial Appraisal of Mineral Projects. Long old title, but it covered everything that you would cover in in a feasibility study, more or less. So if you can imagine kind of the technical and economic chapters of a feasibility study, that's what I did for my master's. And when the pandemic was at its peak and we were all in the grip of lockdowns and the like, in early 2020, I was approached by Matt Gordon from Crux Investor, who I'd been using Crux Investor as a marketing tool for the companies I was working with. And he came to me and he said, everybody's stuck inside on their computers at the moment. None of us can travel. Online content is going to explode. He said, can you produce a series of lectures introducing people to the resources sector? He said, think retail, just kind of do a series of lectures that would explain how a professional would approach it, but also keep it kind of accessible and relatively lighthearted. And so I thought about that, and I thought, yeah, I can do that. And I dug out my old notes from my master's course, and I looked at the title of a kind of I pulled up a few feasibility studies, and I took all those chapter headings, and they matched up more or less with the notes from my master's course, and I started breaking it down into all of the things that one looks at as a professional investor or a professional in the sector. And I rewrote a whole series of notes, and I eventually said, right, now this is going to be whatever it was, 9 chapters or 13, or I can't remember how many chapters it was, but I'm on lecture 52 at the moment. And of course, the more I've got into it, the more I found it fascinating. So I started off by just kind of making notes and drawing on my own experiences, and then just doing a little bit of research around it. And now when I listen back to my early episodes of those early lectures, I think, oh, they're okay. But now what I do is I craft each episode like an essay, and I really try to make it nuanced and not biased, and they take an awful lot of time. I was doing about two a month during the course, or one a month last year. Then Matt said, Merlin, this is going to take years for you to finish. Can you accelerate? And so I ended up doing 2 a month. And so far this year, I'm so busy with Fitzroy, I've only done 1 episode this year.
Hopefully he's not listening.
Yeah, I know. Well, I don't get paid for it. So I think I should finish it in the next few months. I've got 3 or 4 more to do.
And obviously talking about Crux Investor, which is another podcast and obviously YouTube channel, which happy for our listeners to go and visit. What's your obviously role with them? And again, how does it fit in with what you're doing with obviously Fitzroy?
Fitzroy is my main focus. It's what I spend most of my time on. In my copious spare time, kind of late nights, and when I kind of wake up in the morning, I sometimes pull out the con and kind of keep writing and researching on that, because I find that interesting. I'm great friends with Matt, who's the owner and the main guy at Crux Investor, and he sometimes asks me to interview other companies, and particularly around conferences. So, for example, at PDAC, he said, could I come and I do 1 or 2 interviews in the mornings at PDAC? And it kind of worked for me. I find, as I'm sure you must do when you do these podcasts, I find it so useful speaking to people who are working in the industry. I learned so much about what other companies are doing, about what Fitzroy needs to do, from speaking to other explorers. And because of my technical background, Matt often asks me to address more kind of geological technical issues in the interviews, and I use them as learning experiences about what are other people doing and how can we do that. So I'll probably do, I don't know, maybe two interviews a month, maybe more, maybe 4 or 5, and it takes an hour or so of research and preparation, and then there's the kind of the interview itself. So that's what I do for Crux. I'm like a guest interviewer, and that's about it. So I chat with Matt. Oh, a couple of years ago, Matt, who runs Crux Investor, and he runs a family office, he asked me to find a project. And so I've been working on a private copper project with the Crux Investor kind of family office. And that is actually, we're kind of giving it its new life. And I'm just kind of passing that on almost as a kind of a done package. And so I can focus fully on Fitzroy.
Yeah. I mean, I've listened to Crux Investor, a few of their episodes before, and I know Matt does interrogate, obviously, his guests, which I think is good for our industry. I suppose where my podcasts differ, I want to be a bit more educational to our industry as opposed to necessarily investors. Yeah. So I suppose that's where the difference is. And I get a wide range of guests on that have different backgrounds, different specializations. And I think every guest that comes on, all of our listeners can at least take something away and learn something, whatever that may be. So again, this podcast is more educational, and hopefully that our listeners will take something away from any episode that they listen to. So yeah, and again, encourage our listeners to also look at Crux Investor as well, which I'll include those all in the show notes anyway. I suppose lastly, what's the outlook for Fitzroy Minerals over the sort of next 6 to 12 months?
Quite simple. We've got a cracking portfolio of projects. We've got some kind of large-scale copper potential at Caballos, which I haven't really spoken about, but that's just kind of to the east of Polymet in Chile. Big structures. We've got Codelco to the north, we've got Newmont to the east, and we've got Los Andes Copper just to the south. So hopefully some kind of indications of a big copper system there. We've got this super high-grade, really strong system at Polymet with high-grade copper and high-grade gold, and there just are not these kinds of deposits. Show me good-grade copper and gold projects around the world that have got the real potential to be a commercial venture, and that's valuable. It's worth many, many, many times the market capitalization of the company. Plus, we've got an incipient new discovery happening or kind of exploration, kind of breaking exploration in Argentina. So we've got lots of catalysts. I'd just say kind of more news and culminating in a drill program in Q3. So get in now while you can, while it's cheap.
Yeah. Merlin, really appreciate your time. Thank you for coming on the podcast, obviously telling us about Fitzroy and also telling us about the con as well. If our audience wants to reach out to you, if they've got any questions around Fitzroy and obviously get access to the con, how can they go about doing that? And again, what social media platform channels do you go on and produce news and content?
We do have so Fitzroy Minerals does have an X or a Twitter account. I particularly like the long form LinkedIn. So we've got a LinkedIn page for Fitzroy, and I post on LinkedIn as well. I do a copper review kind of on a monthly basis, and Crux Investor has got its own platform. Lots of my stuff is on YouTube, and there's an actual The Con with a hyphen between the and the con.com is a new website which is just full of those shows, and it's free, and you're welcome to subscribe to that.
I don't think you mentioned about why you decided to call it The Con.
I didn't. I know. The mining sector is full of kind of con artists and rogues and dodgy stories, and there's the whole Mark Twain thing, kind of the liar, a hole with a liar standing above it. And I don't know if you've seen on the BBC, they've got the Bre-X scam going on at the moment. So there's lots and lots of bad news. But
that's all our industry needs.
Yeah, I know. However, the con, so it's a nod to that you have to be careful when you're investing. You have to do your own due diligence. You have to ask questions. And what I've found is that most investors, they typically want to just get confirmation bias. They get an idea in their head. They latch onto something. They really like it. And they say, and in every interview, and in every interaction with the company from then on, they are just finding reasons to confirm their bias. They're looking for justification for their idea set. And what I try to do in the con is I try to say, you need to look at this, 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 and this, and this. And I mean, just earlier, we were talking about it with pre-discovery companies, the team, the cash position, the scale of the asset, independence of your agency. And there are a whole bunch of other things. And I talk about the strategy or the commodity. I spoke about why gold is popular. What I didn't talk about, but I do in the con, is why nickel is harder, or why platinum is harder, or why coal and rare earths, heaven forbid, would anybody want to go for a rare earths company as a junior. It's talk about why these things are different and why they're difficult. So, yes, there's a con, but equally one has to take responsibility and educate yourself. The other meaning of the word, the con, is that quite often in a mineral process flow sheet, you start with geology and you go through to the mine and then you come to the process plant. And your ore is an assemblage of minerals, some which have value and some which don't. When you break up that ore, what you end up with is the non-value minerals go hopefully to the waste dump or to the tailings thing, and you concentrate the value minerals. And you might have several streams of this value mineral. You might have a silver concentrate, or a copper concentrate, or a lead concentrate, or a zinc concentrate, and the various precious metals may partition into those separate base metal concentrates. But in the industry, the concentrate gets short to con. So you talk about the con, and is your con high grade or low grade? Does it have deleterious elements or not? But it is the con, and it's a valuable product. It's a beneficiated, enriched, and enhanced product. But it's not the finished item. And so when I was writing the lectures, I was saying that I'm going to give you these lectures. I'm going to write this all up. It's an enrichment. It should enhance and beneficiate your knowledge. It should benefit you, but it's not the finished product. You've still got to go and do your own work. And then, of course, there's the old English word to con, or to ken, or to the conning tower on the naval ships in the marine industry. So it's to know, to learn. It's the beneficiated product, but not the finished article, and it's to watch out for the shysters and the rogues. So that's why I call it the con.
Yeah, no, that's great, and a great name as well. Obviously, we've included these in the show notes so people can have access to it, and on obviously all the links that you mentioned for easy access. We should do another follow-up podcast maybe later this year or next year once it's finally completed. And obviously, you can give us an update on Fitzroy as well. So hopefully you can come on the show either later this year or even next year.
I look forward to coming and talking about the exploration drill hole, the discovery drill holes, the 10 meters at 20 grams a ton that we'll be able to report to the market, or whatever it is.
Yeah. Well, all the best for the remainder of the year. Hope you enjoyed that episode. As always, appreciate your continued support. Please keep sharing these episodes far and wide. Obviously, we've got a bit of a double whammy here. Obviously, you can learn a little bit more about Fitzroy, but also the con. And those that are investors, whether you're a novice investor or even an experienced investor, I'm sure by looking at any of these episodes that obviously Merlin's put together, I'm sure you're going to learn something. So, as always, appreciate your continued support. And until next time, happy mining.
Thank you for listening. Remember to reach out to Rob via the show notes, and be sure to subscribe and leave a review. Until next time, happy mining, helping each other to improve the mining industry.